Have you ever wondered what separates the people who panic during a crash from the ones who come out of it richer than ever? Why do some lose everything, while others seem to print money from chaos? Because here's the truth. Every crash in history has created more millionaires than any bull market ever did. And the one coming in 2026 could be the biggest opportunity of your lifetime. The question is, will you be ready to use it? Let's face it, everywhere you look right now, things feel unstable. The economy is slowing down. Inflation still eats away at savings. Interest rates are sky high, and major companies are quietly laying people off. And yet the stock market is near record levels, as if none of this even matters. But here's the thing. Markets always seem safe, right before they crash. The warning signs are already flashing bright red, but most people aren't paying attention. You, however, are about to understand what's really going on. And more importantly, how to turn what's coming into a once-in-a-generation opportunity. Because yes, the crash is coming. Not because of fear or panic, but because math, history and cycles all say the same thing. But the goal here isn't to scare you, it's to prepare you. So when everyone else runs from the fire, you'll know exactly where the gold is buried. Let's start with what's happening under the surface. Right now, the economy is being squeezed from every direction. Interest rates have been pushed to levels we haven't seen in decades. Businesses that once relied on cheap money are suffocating. Real estate is priced beyond reason. The average person can't afford to buy a house, and credit card debt has exploded. People are borrowing just to survive. And yet stock prices keep climbing higher, completely disconnected from reality. It's like watching someone stack bricks higher and higher on a crumbling foundation. Eventually, gravity always wins. This is what's known as a late cycle illusion. It's the stage where optimism blinds reason. Investors convince themselves that this time is different, but it never is. It's exactly the same movie playing over and over again. And it always ends the same way. The dot-com bubble in 2000, the housing bubble in 2008, and now the everything bubble of 2026. You see, history leaves clues. There's one chart that Warren Buffett himself calls the single best measure of whether the market is overvalued or not. The ratio between the total stock market and GDP. When that ratio climbs above its long-term average, it means stocks are overpriced compared to the economy that supports them. And right now, that ratio isn't just above average. It's nearly double what it should be. That's a major red flag. The last 2 times it hit this level, we had devastating crashes. Then there's the Federal Reserve. Jerome Powell has kept interest rates at some of the highest levels in modern history, and most people think, well, as soon as he cuts, everything will go back to normal. But that's exactly the problem. Every major recession in history didn't start while rates were going up. It started when the Fed began cutting, because that's the moment when reality hits, when growth slows, profits shrink, and the system begins to unravel. It's always after the cuts begin that the real pain starts. And then there's the housing market. Adjusted for inflation, home prices in the United States are now even higher than they were before the 2008 crash. Think about that. People are taking on 7% or 8% mortgages just to buy homes that are priced higher than the previous bubble. Do you see the problem? It's unsustainable. And when something is unsustainable, it breaks. Finally, we have the crypto market, an incredible example of how cycles repeat with near mathematical precision. Every 4 years, Bitcoin and the broader crypto space go through massive rallies, followed by brutal crashes. 3 years of incredible gains, and then 1 year of collapse. It happened in 2014, again in 2018, and again in 2022. And right now, we're in that phase where excitement returns before another potential fall. If the pattern holds, 2026 could bring another big correction, not just for crypto, but for risk assets across the board. Add all this together, and you start to see the bigger picture. The warning lights are flashing in every corner of the financial system. But where others see danger, you can see opportunity. Because if you know how to play this right, a crash isn't the end, it's the beginning. Let me explain. Every great investor, from Warren Buffett to Charlie Munger, from Ray Dalio to Howard Marks, has said the same thing in different ways. The best time to buy is when everyone else is terrified. But that's easier said than done, right? Because during a crash, fear controls everything. Your friends tell you to sell. The news screams collapse. Your portfolio bleeds red. And yet, that's when wealth quietly transfers, from the impatient to the prepared. So how do you prepare? The answer begins long before the crash actually happens. Right now, while markets are still high, you need to position yourself like the pros do. Let's take Warren Buffett as an example again. At the end of 2025, his company, Berkshire Hathaway, was sitting on one of the largest piles of cash in its history, roughly half of its assets. Think about that. The greatest investor alive is sitting on nearly 50% cash. Why? Because he knows something simple. Cash isn't trash during crashes. It's ammunition. Just a little break, I opened a free Telegram community where I teach how to earn money with YouTube and build channels like the one you're watching. If you want to understand how to do it, there's the link below. Back to before. When prices fall, cash becomes power. It allows you to buy great companies at a discount, real estate at half price, or assets that everyone else is forced to sell. But it's not just about holding cash. It's about having a plan, because opportunity doesn't last long. When markets crash, they crash fast. The window to act is small, and only those who are ready will take advantage. So here's how you can do it, step by step. First, you need to build your dry powder. That means holding enough cash or short-term investments, things that won't lose value in a downturn, so you can strike when the time comes. You don't need to sell everything. You just need enough to move when everyone else freezes. Even 30% cash is enough to make a difference. Second, make your list now. Every crash eventually turns into a clearance sale on quality assets. Write down the companies, ETFs, or sectors you believe in long term. Look for the ones that make real profits, have low debt, and dominate their industries. Because when panic hits, even the strongest businesses get dragged down, and that's when you buy. Third, be patient. Timing a crash perfectly is impossible. But you don't need to catch the bottom. You just need to be buying when everyone else is selling. Imagine if you had bought great companies like Apple, Amazon, or Google in 2009 after the financial crisis, or Bitcoin at $4,000 in 2020 when everyone said it was dead. Those who had courage in chaos changed their lives forever. Fourth, diversify your bets. The people who get destroyed in crashes are the ones who go all in on one thing. Don't do that. Spread your money across stocks, bonds, commodities, real estate, maybe even some crypto if you understand it. Because the goal isn't to predict which one will explode, it's to make sure you're in the right places when they do. And finally, master your mindset. This is the hardest part, because fear is contagious. When markets fall, the human brain screams at you to sell, to protect what you have. But the wealthiest investors train themselves to do the opposite. They feel fear like everyone else. They just don't act on it. They follow logic, not emotion. Remember this, market crashes are emotional hurricanes. The weak hands get blown away. The strong hands build foundations. Which side will you be on? Now let's imagine what 2026 could actually look like. Stocks fall 30%, maybe 40%. Housing prices finally break. Crypto gets crushed again. The headlines are full of doom. But underneath all that noise, something incredible is happening. Hidden in the panic are bargains, the seeds of the next bull market. It's exactly how Buffett made billions after the 2008 crash, buying when everyone else was too scared to touch the market. That's how you use a crash to get rich, by being ready before it happens. So what are the signs that tell you it's close? The same ones the big players watch. Extreme overvaluation, high leverage, and investor euphoria. When people stop asking, is this risky? And start saying, it can only go up, that's when you know the end is near. Look at the past few years. Speculative mania in meme stocks, over-leveraged real estate, crypto gambling, and AI stocks trading at 100 times earnings. It's all the same pattern, just wearing a new mask. The characters change, but the story doesn't. And when that story ends, when the crash finally arrives, remember this. It's not the end of the market, it's a reset. The rich will get richer, not because they're lucky, but because they're prepared, because they understand that chaos creates value. That fear is temporary, but value is forever. Here's a simple example. During the 2008 crash, a company like American Express lost over 70% of its value. People thought it was finished. Buffett didn't. He invested hundreds of millions at the peak of panic. Within a few years, that single decision made billions. Not because he knew the future, but because he understood one rule. Great assets always recover, bad ones don't. Your job is to tell the difference, and you don't need to be a billionaire to apply that. Even small investors can use the same strategy. If you have $1,000, $10,000, or $100,000, the principle is the same. During a crash, quality assets go on sale. And if you keep your head while others lose theirs, you win. So when the crash of 2026 hits, and it will, you'll have two choices. You can panic, sell everything, and join the crowd. Or you can see it for what it really is, the financial reset button that the world quietly presses every few decades. It's the storm that clears the air, the fire that burns the forest, but leaves fertile soil for new growth. And those who understand that, who have prepared their mindset and their money, will walk out of it stronger, richer, and freer. But don't wait until it happens. Preparation is wealth. Panic is poverty. Every crash rewards the disciplined and punishes the emotional. And discipline starts now. So as we approach 2026, remember what you've learned here. The signs are there. Extreme valuations, dangerous debt, overconfidence, and an economy stretched too thin. But so are the opportunities. Build your cash, make your list, watch patiently. And when the storm hits, act decisively. Because while everyone else is crying about losses, you'll be quietly building your fortune. That's how you use the 2026 market crash to get rich. Not through luck, but through preparation, patience and courage when others have none. Every crash writes a new chapter in financial history. The only question is, will you be one of the names written in bold? Because when the dust settles, the people who acted in fear will be forgotten. But the ones who acted with strategy will be remembered as the ones who turned the biggest market crash of their lifetime into the greatest opportunity they ever had. What do you think about that? Let me know in the comments. And also smash that subscribe and like button. And I also want to remind you that if you want to build a YouTube channel like the one you're watching now and make money from it, I opened a free Telegram community with the link below. See you there or in the next video. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.